Welcome back, everybody. This is the Mortgage Playbook, where we talk about all things home buying and real estate. My name's Colton. I'm your host, a licensed mortgage loan officer at North Point Mortgage. And today we have a very special episode. We'll be talking about the lake life up in North Georgia and eastern South Carolina. And we have a very special guest joining us today to discuss all the different options you have and the little great things that come with lake life. So please stay tuned, because this is going to be a great one. So joining me today is Jonah Chapman. He is an expert up at the Lake Hartwell area. He is a licensed realtor at Living Down South Realty, and he's going to just join us today and help us understand the little ins and outs of the lake world. So, Jonah, thank you for coming on.
Thank you for having me on.
Of course, man. So, it's going to be a fun episode. So,
looking forward to it.
Oh yeah. All right. So, getting into the swing of things, obviously, real estate's a very big industry. A lot of fun things that get you into it. But what made you get into the real estate industry?
Really, for me, I started out working like everyone else, and over the years of just watching my parents work 80 hours a week, never really being home to see everybody, not loving what they do.
Oh, yeah.
And I just look at that and I'm like, there's got to be a better way of doing things.
Yeah.
So that's what made me want to go out and go into business for myself. And short while I got into business for myself, I saw my aunt doing as well as she did with real estate. And I said, well, maybe I should try that.
Yeah.
So not too long after I come up with that, I got my real estate license for South Carolina. And then shortly after that, I got my reciprocity license for Georgia.
Okay.
So I now cover both states.
Awesome. That's pretty good to do, man, especially in this times where you have a lot of people moving from up north down. They don't really know if they want the Carolinas, Bama, Georgia, Florida. So that's good to be licensed in both. So
absolutely.
Oh yeah. So what I understand, obviously you're on Lake Hartwell, which is arguably one of the more pretty lakes, in the Georgia area. But what made you kind of decide on Lake Hartwell and really decide on that market?
Well, Lake Hartwell is where I grew up. I grew up in Franklin County, graduated from Franklin County High School. It's just an area I know, and it's an area I live in. So why not work there?
Yeah, no, exactly. So, okay, awesome. And so, for someone who's never really been to the lake, what is the lake kind of have to offer, especially Lake Hartwell?
So Lake Hartwell, you've got your fishing, you've got swimming, you've got boating, kayaking, just anything involving the outdoors you can do on Lake Hartwell.
Okay.
Even crazy things on Lake Hartwell.
Oh yeah.
It's not as crazy as Lanier, but it can get up there sometimes.
Oh yeah. So and it's one of the better fishing lakes too. They have some big tournaments out there every year too.
Agreed.
So.
We actually have the Bassmasters coming next year.
That's okay. That's pretty sweet. So awesome. Okay. So kind of switching into the swing of things, the lake living versus traditional homes, what are some of the biggest differences you see versus owning a lake on the home or owning a home on the lake versus maybe owning a home in a residential area?
So like owning a home in a residential area is a little bit different because one, you don't have a giant lake in your backyard, but you also may have a little bit more yardage as opposed to being out in the suburbs where, your backyard backs up to a fence in somebody else's house.
Yeah.
The lake, your yard will back up to the core line and then the shoreline.
Okay.
So the difference between the core line and the shoreline, the core line's public property.
Okay.
So your property goes all the way back to the core line, and then past core line is public property.
Okay.
So anybody can go up on that and use it if they wanted to. And then you have your lake right there, which everybody can use.
Oh yeah. Okay. That's awesome. And so are there any, big hidden costs that are different, whenever it comes to buying a lake on the home or a home on the lake versus a residential home?
So one of the biggest costs I see when it comes to buying a home on the lake is if it's dockable. You got to go out and go get your dock permit through the Corps of Engineers. If there's no like golf cart path or any underbrushing, you would need to do that to get access to the lake, especially in these more wooded lots that are grown up.
Yeah.
You've got limited access. Like, I don't mind walking through the woods, but most people don't like doing that.
Yeah.
So that's a cost right there. You'd have to get a permit through the Corps of Engineers to get all the underbrushing taken care of. And if it is dockable, you get a dock permit, which you have to renew once every 2 years, and it's about $800.
Okay.
So sometimes people don't account for everything when it comes to buying a home, and that's one thing to keep in mind. It's important to keep that dock permit because that brings so much value to a home as compared to a home without a dock permit. And the way the Corps of Engineers treats it, it's a first come, first served basis. So if you don't get the dock permit and your neighbor gets it instead, you're out of luck. You can't go back and say, "Oh, well, I want it now." It's too late.
Okay.
Somebody else gets it.
Okay. So that's probably a big misconception that a lot of people have, is that you think you automatically get a dock, you get a covered dock, whatever it may be, but that's usually not the case.
Especially on Hartwell. Hartwell's divided up into 3 zones.
Okay.
You've got your green zone, which permits all docks. You've got your yellow zone, which doesn't permit docks anymore.
Okay.
Prior to 2020, you'd have to get the Corps of Engineers to come out and look over the property to make sure that a dock would fit in that particular spot. But after 2020, in yellow zones, you can't have a dock permit.
Okay.
Red zones, no dock permit whatsoever.
Oh gosh.
No dock permit or underbrushing. Yellow, you could do some underbrushing up to the setbacks that the Corps of Engineers sets.
Okay. So what would be some other misconceptions then that you're seeing a lot with buying a home on the lake?
So one story I've heard about somebody buying a home on the lake is individual will come down from up north. He bought a lake lot. He spent about $800,000 on his house. He loved everything, but it was in the woods. And at the time, he was told, don't cut down any trees because that's Corps property, it's public property. You don't want to do that and provoke the Corps of Engineers. Well, this guy had a lot of money, and he thought, well, I'll just pay the fine and go on about it. Well, the Corps of Engineers' response to that, with him cutting down all the trees, is $10,000 per tree.
Oh my gosh.
And they can revoke your dock access, which they did on that property.
You're
so for the
kidding.
lifetime of that property, it can no longer have a dock. They said, well, you better enjoy your view because you won't have a dock to be able to use it.
Oh my gosh. That's insane.
Yeah.
Oh my gosh. So that's probably, I don't think that necessarily affects the price too much, but having those restrictions,
it's dramatic when
Okay.
you think about it, because having a dock access, it affects the value by 6 figures.
Gosh. So what are some of the price ranges you're seeing right now? Maybe one with a dock versus without a dock.
So if you're on the lake, but you don't have a dock, I would say $500,000 and below is a realistic number. With a platform dock, I would say $400,000 and up to about $550,000. And then if you're wanting a covered dock, get ready to spend $600,000 or more.
Oh gosh. Okay. Which is, but still, if you're looking at lake properties across the state of Georgia or Tennessee or South Carolina, wherever it may be, that's still cheap to get a nice home on the lake where you have private dock access with a covered dock. You're looking at spending over $1 million at some of these different lakes. So,
absolutely.
Yeah.
Well, and Hartwell's getting to where it's getting more known. So the more demand it gets, it's like with anything when it comes to economics, supply and demand. Less supply you have, the more demand you have, the more the price is going to go up. And we've seen that over the past 5 years. Right after COVID, everybody started buying these lake houses. They're buying them for $200,000, $300,000, $400,000. Now they're selling for over $6 million, and they're the same lots that were bought 5 years ago that were being bought for $3 million, $4 million, and $5 million.
So with the prices going up, are you still seeing that same demand, that you were back in 2020? So there's still demand, but the problem that I'm starting to see now is people are, and I'm seeing this overall in the entire housing market. The market has been correcting from
people overpaying in 2022 and 2023, where somebody will come down and say, I'll just pay 50 grand over list price.
Yep.
Well, now that interest rates have been hit the way they have, people are holding on to their purse strings a little bit tighter.
Yeah. Oh yeah. Without a doubt.
And that's definitely been a reflection when it comes to lakefront real estate as well.
Oh yeah. No, I could definitely see that. So okay. So with these buyers that are still coming in, are you seeing more investors or second homes, or are you seeing actual, primary people going in to buy these as primary residences?
So a lot of people that I'm working on the lake currently, they're looking at secondary residence.
Okay.
They'll have their main residence, then they'll come down and have their secondary residence that they're looking to retire to, or just a summer home.
Yeah. Okay. So not as many Airbnbs as just second homes, really.
Yeah.
Okay. Which is, that's, if you're looking to buy a lake, buy on a lake without a bunch of investors coming in or a bunch of, weekly rentals, that's pretty good to note.
And Hartwell does have its Airbnb. I mean, we've got an Airbnb market on Lake Hartwell as well.
Just like everybody.
I've found some properties that aren't in an HOA because HOAs are, how restricted they are.
Yep.
You can't have commercial property, but they're few and far between.
Obviously, the market, just like everywhere else, has shifted quite a bit over the last few years. And, kind of flipping over to the more finance side, from your experience, what are some of the finance challenges that come up whenever it comes to buying a home on the lake?
Well, a lot of pushback I'm getting right now is interest rates.
Okay.
And I feel like, again, that goes back to the entire housing market overall.
Yeah.
The one thing I always try to tell people, though, is, you can buy this house today, and yes, you're going to have a high interest rate, but with the way prices have been going up in the past 5 years, in 5 years, home prices have gone up at least 20%.
Oh, yeah.
So would you rather pay 20% in 5 years' time, or pay a higher interest rate now and get in the door today? But the way I negotiate some of my deals, I get some closing costs to help them buy down the rate.
Yeah.
Temporarily.
Oh yeah. Yeah. Just like, we have, Jonah and I have a client right now that we're working together with, and Jonah did a great job finding them a new construction home, pretty much new construction, and getting the max amount of seller credits that we can get.
I got them 6%.
Yeah. That's awesome. So, that's definitely a big thing, especially if we can get the rate bought down. But yeah, just like you were saying, if you're paying more than $2,000 a month for rent, you're paying somebody else's mortgage. Somebody else is paying, you're paying your landlord's mortgage at that point,
The way I frame it is it's 100% interest loan.
Yeah.
It's a loan you will never pay off.
Yeah. Yeah, exactly. So yeah, you can go through and look at the numbers, but if you're renting for 5 years versus owning for 5 years, you might be paying less every single month and every single year for rent. But if you own a home, you're writing off your interest in most circumstances. You're deducting property taxes from your bottom line and your taxes. There's just a lot of benefits that come to owning a home. Equity. Yeah, 20 years from now, that house is going to likely be worth quite a bit of money compared to where it is now.
Because think about the buyers that bought in 2019, 2020, 21, 22.
Mm-hmm.
Think about where they're selling at now. They bought for $300, now they're selling for $600 on the same lake property.
Yeah. Oh yeah. Yeah. Granted, we had an interesting, world times that happened from 2020, but and that definitely boosted it. But even then, the average rate of growth is like 3% year over year on a home price.
It is.
So if you own a home for 5 years, that's mathematically 15% in equity that you've just gained.
Yeah.
So, okay. It makes a lot of sense to buy a home.
It outpaces what you're paying in rent year over year.
It kind of brings us to our next point as far as financing goes. Whenever it comes to buyers on the lake, are you still seeing a lot of people using, financing, or do you see a lot of cash buyers?
So I've seen a combination of both. Primarily, I've seen people doing financing.
Okay.
But they put a significant portion of that down. So like I had a buyer recently, he's looking at, close to $500,000 home, and, He's like, well, I've got about $150,000 in cash that I'm willing to put down today. That's not a small amount of money. That's quite a chunk of money.
Oh
to
yeah.
be putting down on a house.
Oh yeah. No, I mean that's you're definitely getting some people that are putting big chunks down. I think housing prices are just so drastic now that you can't. I mean, if you're gonna buy cash, it's because you just sold your house and you didn't have a loan on it, or whatever it may be, or you just were really, really good at saving for the past 10, 15 years. But okay. And so, obviously there's some special programs that we can, do for certain properties, and especially up in the Hartwell area. Most of that's USDA approved. And so, USDA is that 100%
I
financing.
believe all of it's approved unless you get up into Anderson.
Yeah. I mean, once you get to where it's very populated, obviously it's not going to be. But yeah, I mean, USDA, you're going to get a rate that's just as competitive as an FHA rate and almost as competitive as a VA rate, which, will be the best rates you can get right now. And it's 100% financing. So, the mortgage, your mortgage insurance, quote unquote, is called a monthly guarantee fee, and it's 0.35%. So it's going to be less than your minimum, for FHA, about the same as what it would be on conventional with 5% down. So yeah, I mean, USDA is a great program.
And that brings me to a topic as well. I met a couple back in December and got them closed on a home in January.
Mm-hmm.
I got them in on the USDA program.
Yeah.
And we got them 6%.
Yeah.
And they went to their own closing and got paid.
Yeah.
Buying a home, they got paid.
Yeah.
To buy a home.
Yeah, they got money back at the closing table, and it looks like with this other USDA that we're working on now, that might be the same case with them too. They might be getting a check back at closing. So yeah, there's many ways that you can go about buying a home for very minimal out of pocket. So no, that's great. And what in your experience do you think buyers need to be prepared for whenever it comes to being competitive with an offer on a lake home?
Having a pre-approval will go a long way.
Okay.
Because I've talked to so many buyers, and we want to put an offer on this, and I asked, well, have you been pre-approved? No, but we want to get the house. And I said, well, your best chance to get the house is to either show me a proof of funds through your bank statement or a pre-approval letter, because the seller's not going to take an offer seriously without one of those two things.
Yeah, no, I mean a pre-approval letter is very big, because it basically lets the seller know, hey, you've been looked at by a lender. They say you're good. I'm going to trust that lender, kind of thing. So no, that's great. Yeah. I mean, as far as tricky clients go too, I mean, I'm sure every single day you're seeing different people come in, whether they own businesses and they're writing the stuff off. There's probably some pretty tricky clients and incomes that come in.
Creative financing.
Exactly. So that's where, your bank statement loans and your asset depletion and that stuff comes in, where we as the lender are able to approve your income based on what we see coming in and out of your bank statements, or if you have a very big chunk of cash in your retirement or in your bank account, we can actually use that as something called asset depletion, where you can divide it by a certain amount of months, what's in your balance or what's in your bank account, and we can determine an income based on that. So there's definitely some ways to get around that creative financing, as you say. So yeah, I mean, I just think lake living is definitely
it's a way of life.
Yes, exactly. So
we're the new beach.
Exactly. So, well, obviously there's probably some mistakes and pitfalls that we see each and every day. Do you have a lot of experience in seeing people, maybe whenever you buy a special house, there needs to be any certain inspections or due diligence terms whenever it comes to, buying a specific home on the lake?
So usually when we go and look at a house and it's something that somebody likes and they say, well, I want to think about it. That's great. It's good for you to take the night to think about it, but keep in mind, while you're thinking about it, you may not be getting in it.
Yeah.
And the way I always tell my clients, I said, thinking about it is what due diligence is for.
Mm-hmm.
If you want the house, you need to move, especially with us getting into the spring and summertime.
Yeah.
You've got people out there right now looking, and they are writing offers on site.
Yeah. Yeah, I definitely think due diligence. Obviously, you want to have it longer than shorter, but if it gets competitive, if you're confident enough, it makes sense to do a very short due diligence if you need to get that offer in. So okay,
Well, and we could also, another thing to kind of clean that up, depending on the competition,
yeah,
shorten your due diligence, putting more earnest money down,
yeah,
asking for less in closing cost.
okay,
Maybe if you need some closing cost, go over that list price, but get that back in closing cost.
okay, okay. And so I guess this kind of loops into if someone doesn't have an agent lender team that really fits them, what's some stuff that can go wrong?
Well, they're not going to be as experienced with the market. They're not going to have the database that I would have access to look at recent solds
Yeah.
when they go to buy a house. So they could be accidentally overpaying.
Yeah.
A lot of people don't have access to the contract forms, the official contract forms, not something you download from the internet.
Oh yeah.
When it comes to writing a contract on an offer, and I mean, you may be an attorney, and if you are, great. But to the everyday person, a purchase and sale agreement in Georgia or an agreement to buy real estate in South Carolina, it's going to look like foreign language when you go to read it. And
Yeah.
well, how do I write this?
Yeah. Oh yeah. No, and that's good too, especially with you being in both states. You have that experience of looking at a contract that's specific to Georgia and a contract that's specific to South Carolina, because a lot of people don't know that they do look completely different when you get down to it.
And the paperwork, Georgia has a lot more paperwork. They,
Yeah.
they are a lot more strenuous than South Carolina.
Oh yeah.
In my experience.
Oh, I'll get a purchase and sale agreement from Georgia, and it's 50 pages.
Yes.
And then I'll get a right to purchase real estate from South Carolina, and it's 15 or 20. You're like,
20.
Oh my gosh. Yeah.
I think the one that I recently got under contract in South Carolina was 19.
Yeah, I mean that's a dream right there. Not to have to scroll through and get a cramp scrolling on your mouse.
A contract I had earlier this year in Georgia, I think was, I want to say 30.
Yeah. Oh yeah. No, it's hefty, and then you get into the addendums and amendments, and each one of those have 3 or 4 pages. So no, that's yeah, it's definitely a lot. But okay, well, kind of going back to the location, of being on the lake, obviously, are there certain areas of Lake Hartwell that are more desirable than others?
Well, it depends on what type of lifestyle you want to live. Do you want to be closer to town? If so, I would recommend Anderson, maybe Hartwell,
Okay.
because Anderson's a little bit bigger.
Yeah.
So if you want the creature comforts of Target and Starbucks,
Yeah.
that might be a better spot for you. But if you're wanting a little bit calmer, a little bit more slowed down, I would recommend looking at Livonia, Toccoa, Westminster, Fairplay, that area.
Okay.
It's a lot quieter.
Yeah.
And a lot less crowded.
Oh yeah. Okay. Well, good.
And the price points are going to be a little bit more favorable than what you would see over toward Hartwell or Anderson.
Yeah. Oh yeah. Okay. And so obviously, whenever it comes to buying in specific areas, specifically on a lake, dock access, water depth, they can all kind of be big factors. So what do you kind of see whenever someone comes to you and says, "Hey, I want to buy on the lake"? What is some of the requirements that, quote unquote requirements they give you to, make that their perfect home? What are they really looking for?
Well, it depends. Do you want lake access? I can go show you some houses that have lake access, but they may not have a dock.
Mm-hmm.
It would depend on your price point. It would depend on what do you want the shoreline to look like.
Mm-hmm.
What type of dock do you want to have? Do you want to have a platform dock? If so, if you don't care about keeping your boat out of the weather, then a platform dock would be for you. Okay. But if you want a covered dock or a more party dock, a covered dock would be what you'd be looking for. One thing in particular that's more desirable now, because the Corps of Engineers banned any new ones coming in, is a double-decker dock. Okay. Are you familiar with those?
Oh yeah, basically a boathouse, pretty much. Yeah. Oh yeah.
Boathouse on the water.
Yeah, exactly. So, oh yeah, no, those are fun. You got lower level for the boats, and the upper level you put a little
For
ping
the
pong
party.
table. Yeah, exactly, exactly.
For the
So,
party and getting a little wild on Saturdays.
oh yeah, oh yeah, oh yeah. So okay, okay. Well, obviously, I think we kind of touched on it a little bit earlier, but regulations and restrictions that you see, on the lake. I know obviously we talked about, the different codes that you have, and not being able to put a dock on some properties. But are there any restrictions that you see, outside of the big stuff that kind of shouts out and really makes it not difficult, but just kind of an extra little step you have to go through to buy a home on the lake?
Well, the dock permit
Okay.
itself. So typically, when you buy a home, you think, well, if the deed transfers over to my name, the dock permit should as well. It does not.
Okay.
So when you close on a home, you have 7 days to get that dock permit transferred from the seller's name into yours. If you don't, then it goes up for grabs for someone else to get.
Okay. Okay.
And that could be a strenuous step because a lot of people don't know that.
Mm-hmm.
And they don't know who to contact to get that transferred over, especially if you don't have the right agent telling you all these things to do before you do it.
Exactly. So okay. And so, with the not challenges that come up, but with you living on the lake, with the extra stuff you need to get for potentially getting a dock on your lake home, are there any trends that you see where homes on the lake might appreciate differently, compared to your normal just residential property?
Well, I think they appreciate differently because there's not as much land to put docks on to have on the lake as
Okay.
what you would see in the suburbs.
Okay.
Suburbs, we could sprawl out into the pastures as all the way out to Kingdom Come if we wanted to.
Right.
But on the lake, you've only got 962 miles of shoreline.
Okay.
And out of that, I would say a conservative estimate, probably 40% is owned by Corps of Engineers and can't be developed.
Okay.
So that knocks you down to what, about 500-600 miles of shoreline that could be usable.
Yeah. Oh yeah.
That's not a lot when you start getting development coming in and people building houses, people buying lots.
Oh yeah.
That's not a lot when you get down to brass tacks.
Oh yeah. No, exactly. For short-term rentals and Airbnbs, I guess it could be, a really good opportunity for it, but you probably see a lot more people, like you said, buying just those second homes for themselves, and probably because it is, it can be a little tricky to get an Airbnb on that lake. Is that true?
It is, because a lot of your lakefront access is going to be in an HOA, or it's going to be in a neighborhood that's got old CCNRs, which are covenants and restrictions. And what those do is, I'll go through those when I'm looking at property for somebody to tell me, hey, I want an Airbnb. Mm-hmm. Okay, I'll go and look through those covenants and I'll look at different properties. If a covenant says that no commercial activity can be permitted on any lot, you can't do an Airbnb on that.
Okay.
But if there's a home in a neighborhood that doesn't have any bylaws, any CCNR, anything, it's permittable. It's fair game.
Okay. And so if someone wants to look for, that second home where they kind of have that great lifestyle of, okay, I'm going to get away from the city and come here, but they also want to look at it as a great investment, whether it's Airbnb, whether it's just for down the road, what's something they definitely need to kind of keep in mind to make sure they have both of those in this house?
It would depend on what you're looking at, or what's your primary focus on Airbnb? Do you want to advertise that, hey, I've got a covered dock, I've got, prime real estate where you can go out on your back deck and see the lake, or do I have to go through the woods?
Okay. So yeah, so I guess it kind of just comes down to really what you want, how much. Yeah. And I guess at the end of the day too is the price point, are you comfortable spending enough to get everything you want, kind of thing. So okay, kind of going into that, then let's imagine for a second, let's say you had $600,000 to spend. Okay. What's something that you would prioritize in a home on Lake Hartwell?
Getting a covered dock.
Okay.
because for my boats and my jet skis and whatnot, if I had $600,000, I would want those being out of the weather and out of the rain and snow, because we do get snow. Contrary to popular belief,
Right.
we get snow every now and then.
Yeah. Oh yeah. Oh yeah. Has there been a deal that you've done that really just stuck with you, where you were like, it was, whether it was like, this is amazing, or holy cow, I can't believe we got this one to the finish line? Has there been one out there where you're just like, oh,
Well, there's one that I've done. Unfortunately, it didn't get to the finish line,
yeah.
but it felt like it did. It was a house off of 29 in Hartwell. And, we went through, it was a investor who come out of South Carolina. He's a builder. He buys old homes and restores them.
Okay.
So we come in, we have our inspector come in, here's the inspection sheet. And I remember writing the repairs, and it's 3 pages long.
Oh my God.
So, but I feel like I got a steal for my clients. This was last year. It wasn't a covered dock, but the house is on the lake. It had 2 acres, and it was a platform dock. Okay. You had platform dock access, so you at least have lake access.
Oh yeah.
But I remember this because we get through all that. We get through negotiating. I remember there was some confusion with the repairs, and I had to print out a repair sheet. I went and met with the seller. I highlighted everything that needed to be done and everything that hadn't been done.
Okay.
And everything that was done, I didn't highlight. I took it over to him. I said, this needs to be done.
Oh my gosh.
And I was with my buyer at the time, and, he was there with me. He didn't say anything. I said, this needs to be done. This hasn't been done. This is what you agreed to. This is what needs to be fixed.
Yeah.
So we get to that point to where everything is fixed, and I'm working with the lender at the time. Again, I'm not going to name names, but I wish I had someone else working on that end of the deal. They come to me a day or two before close. They say, Jonah, this isn't going to close. A day or two before we're supposed to close. And this is 60 days in.
Oh, gosh.
He mentioned to me that delinquency come up on my client's credit.
Okay.
And her credit score dropped over 100 points, and they couldn't do it.
Oh, my gosh.
And why this is such a big deal is we were out of our financing contingency at that point. They initially, when they tried to buy the house and I had to write up the offer, they wanted to come in low. They wanted to come in. Keep in mind, we got this deal for $380.
Okay.
It was listed at $400. They wanted to offer $350.
Oh my gosh.
So, and plus all the repairs that we had to ask them to do.
Oh my gosh.
So, I'm thinking, there's no way a seller's going to entertain this. And I told them, no, if you were the seller, would you entertain this offer?
Yeah.
No? Well, then we need to come up with some realistic figures. And I said, I will write this offer, but to get a counter, we need to put some earnest money down.
Okay.
And I suggested we put down $10,000 in earnest money. Okay. And I said, as long as you go through with everything you're supposed to go through on the contract, you will get this back at closing. Well, they didn't tell me about the delinquency that was hiding in their credit. So we get out of the financing stage, out of the financing contingency, because this is in Georgia. Georgia, you have a financial contingency, and we had it out for about 3 weeks from the ratification date. Well, we're 60 days in, so that day is come and gone.
Yeah.
And another reason why I wasn't really happy with the lenders all throughout the contract, I kept checking in with them. Oh yeah, everything's fine. Their financing's rock solid. Nothing's we're gonna get this across the finish line. No.
Gosh.
And they ended up having to lose out on their earnest money. And I tried telling them, like, we have to be honest with clients. You have to, when you're working with an agent, you need to be honest with them. That way they're not sandbagged. That way they can help you.
Oh yeah. Oh, exactly.
Because unexpected things like that, there's only so much an agent can do.
Oh yeah. Well, and that's why, I mean, obviously anything can happen at any point. That delinquency that popped up could have, been there forever and no one ever saw it, or it could have literally just popped up. But that's why there is, it's so important that you have a good team, a good agent lender relationship team that, they're going to talk to each other. They're going to make sure the client's being, as straightforward as they can be, getting the best possible deal. So yeah, that kind of just harps on the importance of having, a
It's a
great
deal I'll
team.
never forget.
Yeah, right. Oh yeah. So okay. Well, kind of switching gears a little bit. If someone, let's just say someone's on the fence about buying, on a lake, or buying, just right now in general versus waiting, what's one thing that you would tell them that kind of maybe not persuade them, but put it in their mind that, hey, it might be a better idea to buy right now than continue to rent.
Well, I'll look and see if there's a house similar to that.
Okay.
That house that we're looking at right now that they really love.
Mm-hmm.
I'll show them, okay, this is what it sold for in 2020 or
Mm-hmm.
2021. This is what they have it selling for now.
Mm-hmm.
This number is going to continue to go up over the years.
Yeah.
So would you rather get in and buy it now for less money, or wait and pay more money down the road?
Okay.
Because a home is always going to appreciate in value.
Yep. Oh yeah. And rates change every day.
Yes.
So, there's always the opportunity to refinance down the road.
I always say, date the rate, marry the home.
Yeah. Oh yeah. I've heard that one I've said that one many times.
I have too. You date the rate.
Oh yeah.
You could always trade out a rate.
Yeah. Oh yeah.
But you can never trade out of a home.
Oh yeah. Well, yeah. I mean, and realistically too, if you ever want to get the equity out of a home, there's 2 or 3 ways to do that. You can take out a home equity line of credit, which that's going to have a pretty high interest rate attached to it, although the amount that you're going to take out might not be a drastic amount, so it won't be a huge payment, but that rate's still going to be pretty high. You can do a refinance with a cash out refinance, or you can sell the property. Those are really your 3 ways to get into your equity.
Yeah.
So, buy the home. You're realistically going to want to refinance one day, whether it's to add additions to the property, to
I would be
make
careful
it more in value.
with home equity lines of credit, though.
Yeah. I mean, it depends on the market you're in. If you're in a market where rates are in the 7s and you have an interest rate in the 4s or the 3s, you probably don't want to refinance into a 7. But if you're in a market where rates are in the 5s and you're at a 4 or a 3, it might make a little more sense to do that refinance if there's a lot of debts that you have that can be paid off, to where we bring down your total debt to where it makes sense. Obviously everything has to make sense. But
well, not only that, but like with a client I'm particularly working with recently,
mm-hmm.
they maxed out their equity in their house.
Okay.
And they were trying to sell their house, and there's not really any wiggle room to get it sold.
Basically, they refinanced, added stuff to the home, and now the home's not worth what they were hoping for, basically. And gosh.
Well, and one thing I see oftentimes a lot of people do, especially now that we're getting into the green age of things, and I'm not saying this to scare people away from solar panels, but you're not going to get a return on investment like what a lot of people think they're going to get when they add solar panels to a house.
Yeah, at least not anytime soon.
No, no. Now, if you live in a house 10 years, sure, I could see that. Yeah. But if you buy a house 2 years ago, you put solar panels on it the day you bought it. Typically, when you put solar panels on a house, it acts as a second lien if you don't pay them off immediately. So when you go to sell your house, you have to pay them off upon the sale of the house.
Yeah.
So that takes out a lot of your equity.
Gosh.
Well, that's going to make selling your house more difficult, because now you've got a second thing to pay on.
Oh, yeah.
So you may not get as much at the closing table as you would had you just not done that.
Yeah.
Another thing that's in the same category, I would say, is pools. I love swimming in a pool just as much as the next guy, but they don't give you a return on investment like what a lot of people think.
Yeah.
If you stay in it long term, I could see where you get your return on investment. But if you're only staying in it 2 to 3 years,
Yeah.
that $50,000 pool or those $50,000 solar panels might get you 10 grand back.
Yeah. Gosh, it's crazy.
So now you're in the whole 40.
Yeah. Oh yeah. Yeah. I mean, with solar panels, it's one of those things where you put it on thinking you're going to save money. With a pool, you're probably putting it in just for fun. But regardless, I mean, there's got to be that piece in you that's like, oh, I
spent 50 grand on this in-ground pool, or nowadays it's getting more to be 100 grand.
Yeah, gosh.
Why am I not getting more out of it?
Yeah. Well,
there's not a big return on investment on those items.
No, you don't go buy a brand new car and then turn around and sell it for the exact same amount you bought it. It's going to be, realistically, you buy something, it's most likely going to decrease in value.
The big thing that adds value to a house: square footage, bedrooms, and bathrooms.
Yeah.
That's what an appraiser looks at when they go to appraise a home.
Yep.
And then condition to a lesser extent. But the biggest factor: number of bedrooms, number of bathrooms, and square footage.
Yep. Gosh. Okay. Well, Jonah, thanks for coming on, man. It's been a pleasure having you. So I'll go through just a couple more questions for you. So obviously, every single day you're probably seeing a ton of new buyers come to Lake Hartwell. I mean, it's a very desirable lake. But what would you say is the perfect buyer that would just absolutely love Lake Hartwell right now?
Well, ideally, somebody that knows what they want, somebody that's looking for a more slowed down lifestyle compared to going in the office every day, 9 to 5, just fast paced.
Mm-hmm.
If you're looking for fast pace, I wouldn't recommend looking at Lake Hartwell.
Yeah. Okay. So yeah, just low, slow, just down to the
relaxed.
earth. Yeah, exactly. What you want out of a lake property.
Yes.
So okay, and obviously, with the prices of Lake Hartwell, I mean, you would probably say it's probably priced a lot better than some of the other lakes around, right?
I would say so. Yeah. I know for a fact it's priced better than Kiwi.
Okay.
Kiwi's probably one of the more expensive lakes in South Carolina.
Okay.
Georgia, I would say it's beating out Lanier right now.
Okay. And like Lake Burton too. I know Lake Burton's in Seed Lake. Those are all kind of,
Nick Saban's got that $12 million home on Burton.
Oh yeah. So. Oh yeah. Roll Tide, I guess, right?
No, never.
No, God, I can't believe I just said that. But
I know, right?
Go Dogs.
Call yourself a Georgia fan.
Yeah, I know. I gotta just say go Dogs just to make sure it's not the last thing I say for college football. But but all right. So for someone thinking about making the move to the lake, what's some advice you'd give them just to kind of make sure they're ready?
One thing I'd recommend is know what side of the lake you want to be on. If you want, convenient access to shopping, I'd recommend looking over at Hartwell or Anderson.
Okay.
If you want privacy, I'd look more over toward Livonia, Fairplay, Westminster, Toccoa.
Okay. Well, perfect. Well, I really appreciate you coming on. What's some, obviously we want people to reach out to you if you want to buy on Lake Hartwell. Jonah's your guy. I mean, he's, as you can tell, he knows the stuff about the area. So, what's some ways they can get a hold of you?
So my number is 706-988-3386. Email is jonah@livingdownsouth.com. And I've got a Facebook page, Jonah Chapman with Living Down South Realty, or my personal page is just Jonah Chapman.
Perfect. And I'll make sure I put all those in the description as well, so you guys have them. But awesome. Well, yeah, again, I really appreciate you coming on and just kind of letting us know a little bit about the lake life and how actually, pretty attainable it is, especially on Lake Hartwell. So
absolutely,
definitely learned a bunch, and I really appreciate it. So
appreciate you having me on.
Yeah, of course, man, of course. So, if you guys like we said, if you guys want to get a hold of myself or Jonah, learn about the process of buying a home, buying on Lake Hartwell, feel free to reach out. Our information's in the description. We really appreciate you tuning into the Mortgage Playbook this week, and we will see you next time. Thanks so much.